Hello, people. Welcome to IS Forex. I'm African Rebel, and this is where we guide traders from foundations to freedom. In this video, I'm going to talk about how to properly use the trend line. What are the rules applicable to the appropriate use of trend line, and how to properly mark out the correct price patterns. Before we get started, please, if you are new to our channel, don't forget to subscribe. Don't forget to turn on the notification bell as well, and don't forget to like and please share your comments if you find this video interesting or informative. All right, without wasting much of our time, let's dive into the charts and see what we can do. So this is good XAUUSD, and let's break down the chart for you guys. Now, why I said most people knows how to use the trend lines but don't know how to use the trend lines, that aside the textbook rules behind using trend lines, they don't really understand where to put the trend line, where not to put the trend line, which of these swings should I put the trend line, which of these swings shouldn't I put the trend lines. That's what we're going to do right now. Now, the first rule I'm going to talk about here is knowing the phase of the market. The phase. When we talk about the phase, we talk about, is the market impulsing or is the market correcting? Those are the phases of the market. Is it an impulsive phase or in a corrective phase? Is the market moving, creating highs and lows and highs and lows, or is it just a particular run up or run down? Those are the phases. Now, if you are familiar with the Falcon Forex trading strategy, when you come to the higher time frame or the highest time frame, you want to look at maybe the daily or the 1 hour. What you want to mark is the highest point and the lowest low, the highest high and the lowest low of where you want to focus on. You understand? Traders, there are traders who pick this ends and this ends. There are traders who go far to this, but you have to be keen enough to mark out the particular one that you will use to trade. So for me, because I understand the phases of the market, and I know that there are impulses and corrections, I'm going to mark out this high, and this lowest low for me. This is the lowest low I'm going to mark out. Why? Because if you look at the phase we are right now in the market, now let me explain a little. This place was like this, the whole market is in a downtrend, right? Because we are creating higher lows and lower lows, right? So that is the whole phase of the market. Why I mark that place as my highest point and this one as my lowest point is that, all right, you all can see right now that what I have currently on the chart, or the whole chart I have, this is the lowest point. So that is why I mark that. Why I mark the highest point is that the I count here, this is an impulse though, right? But it kind of exhausted, and then we had a very long impulse to the downside, right? This that ended here, then some kind of then the correction started. You see that? Impulse, correction, impulse, correction. Then now we are, another phase is occurring right there. So I chose that place because from I want to take my impulse from the second impulse, not the initial. I don't want this. I don't want to count this among my impulse because it exhausted this one. And then this is, sorry about that. This is what I want to take as my impulse. So I like to mark the highest point of my correction and the lowest point of that same correction as my highs and lows, because I know I want to trade to that extent. And then I know very well that the trend lines are marked on the corrections, not on the impulses. Those are the reasons why I like to mark my highest point and the lowest point on the corrections. I hope that's very clear. So from what I have, my highest point and lowest point, I have to look very well if there are swing highs and swing lows, of which is very, very clear on this good chart right now. I can see this is a high, this is another high lower than this is a lower high, another lower high, this is a low, this is a lower low and lower low. So we are clearing a downtrend as earlier stated. So what we do with the trend line is just to connect them. It's just to connect these lows. Remember, from your textbook rules of using the trend line, do not force it. Do not draw your trend lines on the candle borders. Make sure your trend lines are on the wick. Please note this down. This is one of the rules. if you are new to this Trendline usage system. So make sure your trend lines are on the wick of the candle and not on the body, right? So we have spotted the trend out. This is the outer structure. This is the daily, or the one, or the the daily structure we have. Now, how I roll with the trend line is, when I get the daily structure like this, I make sure I break down the chart till the 15 or the 5 minutes before I get me an entry. Now, this is the reason why I break down. If I want to stick just on this time frame, I definitely will wait a lot of time before I get trade, right? So you don't want to do that. I'm not a swinger, I am a day trader. So I have to go down to the 4 hour, which is the next time frame. Now this is the 4 hour. Now this is another rule. Note this down. Now this is why we read in the beginning of the video. What you do now determines what will happen in your future, right? That's what we read. I think that is a quote from Gandhi, right? So what that is kind of trying to tell you is that, what I want to explain with that is that this initial outer structure is telling us that the market is descending in it. So literally, when you're in a downtrend, what you do, you look for sells. You only sell because you're in a downtrend. You sell when it gets to the highs, and then you buy when it gets to the low, right? But this right now, you just left our resistive trend line, which like created the lower high and then broke this low. So we needed it to come down to the trend line before we start looking for buys, right? Those of us who sold here are still holding the sales. Those who sold here are still holding the sales. So since the other structure is a selling market, like it's in a downtrend, we're literally supposed to be looking for buys. But it is said that what you do today is what is going to be the future, right? Not what you have done before. It's what you do today. So one thing I want you guys to learn, aside, maybe I'm not sure it's in the textbook rules of using the trend line. Make sure that your trend lines are being drawn. The trend line you draw on the chart, every time frame you go to, make sure you draw the particular. You make sure you have a particular trend line at the current spot. The current uh swings you have should be where you put your trend lines. Now, if you look again, this is an impulse. You see the way it ran down. There's no highs and no lows. It just bearish ran to the downside. So that is an impulse to the downside, right? And then after the impulse, we started having corrections. We started having correction. This, there was a little exhaustion here. This, then this, to that side, then down. You see, we started having corrections. So from there, we know that this is where we put our trend line, because we only put our trend line on the corrections, and then we make sure never to force it. Make sure you never force your trend line. You should be on. It should always be on the wick of the candles, not the body. So we leave it like this. This is what we have on the 4 hour. Each time you go down your time frame, remember the rule I just stated. Make sure you look at the current side, draw the patterns of the current side. Or let me say, write this down. The current pattern has the highest probability of playing out. The current pattern has the highest probability of playing out, because if this is 4 hours, so you know there's a lot of pips. It's like 8 hours ago, and then the market have been buying. So this is a lot of pips. You won't be waiting for the outer structure for you to just be selling, right? If you are a day trader, though. So we go to the 1 hour. This is how we break it down. Very, very easy, and very simple. So we go to the 1 hour. Let's avoid the noise from my neighborhood. So this is the 1 hour. This is the 1 hour, right? And then on the 1 hour, we see that we didn't really hit this low. We just came closer to it and then bounced off. But like I said, when you go down the time frames, you have to look inside the current pattern you have for you to find what is happening right there, right? You Let's say, unless you are a pro, or you see it, else I can say there's nothing really visible on the current side unless we switch down the time frame. And you remember I said the 50 minutes is the one, one of the lowest time frame we go to. Maybe you will find the entry finally on the 5 minutes or the 1 minute. So let's go to the 15 minutes so that this place can be clear. Already I know that, yeah, something happened here that gave confirmation that this is going to buy off, instead of coming to the third touch of this guy after leaving this resistive trend line. So let's go to the 15 minute. So quickly on the 15 minute, I already can see that we have a running channel, and let me explain quickly what it is. When I say running channel, is when you have this kind of volatile to a particular direction, and then in that same direction the market start to to and fro, to and fro, to and fro, like start to correct in that same direction. That's when it's called a running channel. It is a running channel when you have an impulse to a direction, and then the market start correcting in that same direction. The correction in that same direction is trying to tell you that the market is about to reverse. So you have to look for the market to break a particular previous high, or previous a previous high or a previous low, if it is for the uptrend. So if you can see very well, the market broke this high, it broke this place, right? And then it also swept these guys. So you know that yes, it is time for the market to give us just a retracement and then pull back, start to go like change its direction. But I'm not talking about market directional change. I'm talking about you spotting the patterns of your trend line. So if I was there, or if we came here earlier, I was supposed to mark this running channel. I was supposed to mark this running channel, which what originated the reversal of this. So for this to happen, it will not be new to you if you knew this pattern running channel. So make sure you always mark out the current make sure you always mark out the current patterns on every time frame you go to. That is the golden rule I want you guys to pick from this particular video. Now let's get to implement this in the synthetic market so you can see how it goes. 75 spot, right? Now this is looking like a little bit different from what we did earlier. What we did earlier, we had our highs and all of them at a particular spot, right? But now, because I see that this is the current candle and this is the highest candle, the current candle is the highest candle of the market right now. The current candle is the highest one in the market right now. So you just go back to your left hand side and look for a particular place to mark as your highest point. I'll mark this guy. Is even if it's very close, the market can get there within. It's not even up to 100 pips for the market to get there. So I also spot out this guy. So it's very easy for me to use those guys as my important levels, and then to mark the lowest level, I will come close and then get me a face, like that started a face on the whole thing. I'm going to mark here. Now I'm going to explain to you guys why I did that. Is because if you look very well, though the market is steep, it's going in a particular direction, just little bit of highs and little bit of lows we have, it's really trending up. If you look very well, you can see an impulse to this side. You see the impulse. Then after the impulse, the market started fading down, up and down, and then right now it's up, right? So I know that there's a pattern right there, and you guys can remember I said your trend line should only be formed or should be drawn on what corrections, right? So we have one there, and then we can easily connect this one and two. We can easily connect these two guys. So from this trend line we know that this guy is definitely going to break it, because he's trying to battle up to the third touch of this trend line. So this is the 1 day or the 24 hour. Then the next thing you do is go to the 4 hour. I'm not explaining entries yet. I'm explaining how we get to read with its trend lines. So what you do when you switch down your time frame, if you see the trend lines are displayed and not on your candles, you just adjust them to fit, and make sure you never draw trend lines on the body. It should be on the wick. So now this is the 4 hour, and like I said, what you do today is what predicts the future. So today or right now, it's literally on the market trying to explain that the current structure is the most, it has the most probability of playing out. The current structure has the highest probability of playing out, right? Because this is an impulse, this is a correction. So it is the current pattern is right, is this one on the 4 hour. So it's basically going to impulse to the upside. And then we know already from our 24-hour bias that we are expecting a third touch for this guy before we look for the sellers, or before we look for sales. So what we do is to map out the structure we have been given here. We have this. It's an expanding kind of structure. Right? Like that. So this is the structure on the 4 hour. What I This is the expanding structure on the 4 hour. Why I'm recording this video today is that I want you guys using the trend lines to always understand that it is what happens currently that is relevant. We have spotted the 4 hour structure. What we do next is to go to the 1 hour. What we do next is to go to the 1 hour. So this is the 1 hour. This is the 1 hour. This is the 1 hour, right? So like you already know, when you read down the time frame, the things they get more clear. It gets more clear. So this is the 1 hour, right? Then the next thing you do is for you to start looking at the current side again. Each time you switch your time frame, look at the current side. So this is the current side. Now what happened? Why did this guy buy? Why did he buy like this? If you look very well, you can see we have this impulse, right? And then this was an expanding correction. This guy is an expander. It's always expanding. Expanding formations and all of that. You see? So it was this the one touch here, the second one, then boom to the upside. And it's always trending. He likes to trend a lot. I love to trade it. 15 minutes. 15 minutes. 15 minutes. And now I'm trying to explain why the buy is happening. The way I explained for the what is it called? The gold. Why the current buy happened. So that's what I'm gonna do here too. I'm gonna do here as well. So the current buy is it started here, right, with this you see retracement candle on the trend line, but you might definitely not know that it's going to be it until you start going. So you have to dive down the lower time frame. When you see retracement candles or candle that will look like a signal, you have to go down to lower time frames to get more confluences. Now, like I stated over there, when you have an impulse to a particular direction and you see the market start to exhaust in that same direction, like creating correction in that same direction, then you know that yes, that trend is ending. So you see there is a running channel here, and this is what originated this current buys we are having. And synthetic index, their pips count is crazy. Pips count is crazy. That's why I love to trade them. Sorry. So this is why. So after this, when you have the pin bar close after that, then you see it's just wow, crazy to the upside, crazy to the upside. So thanks for watching. Please remember, trend lines are drawn on the current pattern of every time frame you go to. The current structure you have, that is the highest structure to play out. That is the structure with the highest probability of playing out. That is one of the essence of this video. A lot of people have been texting me, how do you get to draw on trend line? Sometimes I draw trend line, it doesn't play. Sometimes my trend line did this, get that. This is why I'm doing. That's why I did this video, or that is why I just recorded to teach a little about trend lines. This video was helpful to you. Give us a thumbs up. If you also have a contribution or you have a suggestion or whatever kind of video you want to see, please drop a comment in the section below. Thanks for watching.